Good morning, traders. It's Tuesday, April the 12th. Taking a look at the charts, we're going to start off with the SPY and the SP 500 index using kind of different time frames and cycle analysis. So you can kind of see where I'm coming at or coming from with my kind of gut feeling of where we are in the market and what could happen. Now, overall, the market's climbed this giant kind of Janet Yellen kind of wall of confidence, and we're starting to get to this point here where we've seen some increased volatility, and the SPY is just holding tight here. It looks as though it could break down at any time and start to have a pretty good sell-off. This kind of feel right here feels very similar to kind of something like this over here, where we're just kind of hanging there, waiting for the market to kind of unwind and move down for a swing trade. But it could be also the significant high, but the market might take still. The market always has a way of dragging out. You can see the last time it traded sideways for several more months before actually tanking. Same type of thing over here. You kind of climb that wall of confidence or wall of worry, depending on however you want to interpret it. But everybody piles in, they get overly bullish, and then we're kind of hanging there, and you get that flush out. Then the market struggled, and it still made its high, similar to back here, which we could have already seen this high already. But overall, you can see the market traded sideways and lower for another month and a half, or almost 2 months before it gave way. So that's kind of where we're at, I think. Now, if you take a look at I think it's the weekly chart. So here's the weekly chart, and let me just zoom in here. You can see recent price action that you could argue we're kind of hanging right there. Look what happened in some of these other times where you see that big drop in 1 week, big significant drop, a big significant drop, a big significant drop. These type of plays here where we get these massive kind of waterfall drops. There's a whole bunch of them, but you can see how big some of them can be, and that would bring us right down. There's a critical line in the sand right across here. It's not only a pivot, a bunch of pivot highs, a breakout, a pivot low, a breakdown. Price came up, traded through here for two within a 2 week range, and then extended to the upside. This is also the 2000 mark on the SP 500. It's a whole number. A lot of people will be saying, well, if it pulls back to 2000, I will buy. It's just a nice solid number that some traders and investors put out there. And it acts as support when you're above it, and when you're below it, it typically acts as resistance. So if we do have a sharp fall, I see the first stop coming right down here for some type of technical bounce, or at least a pause before the market goes any further. With that being said, I think we could easily see the market do something very similar to this over here, where we see it kind of, let me get a different marker here, where we see the market kind of grind back up, test these highs somewhere over here, potentially a nominal new high, and then we see it start to fall and test that level and eventually roll over with a multi-week correction, hitting probably new lows and actually kickstarting a bear market, breaking the significant support zone in the SP 500. So that's kind of what I see going there. The big question is, I mentioned this yesterday, is are we on the verge of a massive meltdown, something we saw back in here like in October, where price just keeps selling off in a huge way, never looks back? Or are we going to start to see it kind of top out, become choppy in a big range, and then slowly eventually lose its ground and then break down, very similar to what we saw over here? Either way, I think most of the upside here is done. And I think it's just a matter of time now. Time is going to let this mature and eventually turn into a decline. Now let me just pull up the SPY cycle chart here. Let me see if I can extend this and stretch this out a little bit. So here's the SPY chart. You can see this cycle analysis here. Overall, we've been kind of consolidating. You can see the pink line and this gray, darker cycle line hiding behind it. It's been consolidating, and we've got the short-term cycles kind of floundering down here. And we're at this point here where pretty much we're starting to get an upward cycle again in the short term, and we're having the short term and both longer term cycles kind of move together, creating a synergy. And we've got another week or two as this market tries to evolve. Now these cycles slowly extend and adjust as time goes on, which is why I update them. But you can see we're getting to this point here where we could see one final blow off top, one big short squeeze. This has been a little bit of a consolidation. Tons of people getting extremely bearish, getting short, And of course, the market's going to love to squeeze those people out. It's going to create a really strong pop in price. Usually you see some of the biggest percentage pops in price right near a trend reversal near a market top. And ideally, that's what I would like to see. We've talked about this for about a week and a half, 2 weeks maybe, that we want to see the SP 500 pop up to new highs. We'll see the VIX drop to new multi-month lows. And then I think we see a massive reversal and we could start to see price move down. And this would be ideal for getting along the VIX for an imminent spike play or long-term or play there. And then also this will be a great long-term inverse trade for our portfolio, expecting price to more or less continue to move down over time. Now let me just pull up, let's go to gold here. So here's the weekly chart of gold, and you can see we've had a big run up here, a big spike, came back down, another big run up, came back down, it's come right back up to pretty much this other spike high we saw over here, creating a right-hand shoulder. The question is this just a tight consolidation? We've seen an explosive move up to the 1360 or 1380 level, or maybe stall out somewhere up here, or are we going to start to see the market have a little bit of a correction? And there's some mixed cycles here. The weekly chart is actually showing still more consolidation. The weekly cycle chart showing some weakness going forward here. Not a big drop, but just sideways weakness. The daily cycle, which I'll show you in just a second, shows that we're still going to have a multi-week kind of weakness in the market and see it potentially continue to pull back. And the big pop that we've seen in price, gold is trading up slightly again today. Let me go to the daily chart so you can see where we're at today. We're up 0.2%. You can see we're kind of popping up there a little bit higher, making nominal new highs from yesterday. And I do feel as though, we had that news kind of out yesterday, or the Fed kind of secret meeting closed doors. So I think that kind of helped really fuel. Not to mention we've seen the US dollar has been testing and kind of sliding below critical support. So I think it's got a lot of people piling in to gold. Now, if we take a look at the cycle analysis, so here's the cycle analysis of GLD, which is gold, and you can see we had this cycle kind of top out a long time ago. We had that big pop on news, which we ended up shorting, had a quick move down, and then the market continues to kind of struggle here. You can see these blue cycles here kind of floundering down here. It kind of bounced around, and we've got this cycle that kind of topped out about a day ago. And we've got now, as of today or yesterday, I guess, we've got all three cycles turning down. We've got an extreme cycle high. It looks as though we could easily see this pull back, and this falls in line with what we're looking at the SP 500 cycles. It shows that final pop in price in stocks. When everybody piles in stocks and gets super bullish, they're going to pull out of gold. Gold's going to fall out of favor and come back down at least to the support level and potentially break that level for a big flush out. This is a big cycle low here. There's potential for a really strong kind of washout low in gold before it starts to firm up again. So that's kind of where we are at. Now, gold is a very emotional type of play. Everybody's been piling into the miners. The miners have a very different looking chart. That's because everybody's been anticipating and waiting for gold and miners to bottom for years. And I think we're seeing gold miners outperform right now because everybody's piling into them. And I think that's more of the short-term speculative traders all trying to get in early. And I think it still might not be quite time yet. Technically, the cycle we've still got several weeks where we could see, not saying gold is going to continue to fall all the way down to this level. The price doesn't follow the cycle. So this pink line, we're not saying gold's going to come down to 104, the GLD. It's just saying there's going to be a sideways, a downward bias in gold. It might flag sideways here with a little bit of a downward bias for still several weeks, which kind of falls in line with the weekly chart before we start to see it start another major leg to the upside. So anyways, that's kind of that. Let's take a look at energies. Actually, I want to quickly just jump into the SP 500 futures chart just to touch on it one more time. Yesterday we had that spike low in the market for the SPY. In pre-market trading we saw a spike come down to about this level here in pre-market, and once the stock market opened we saw it start to squeeze up and move higher. And this red indicator here, this is our panic buying, our greed indicator. It actually spiked up around 6 or 7 yesterday. Anything over 3 goes to show the market is all leaning in one direction, and usually the market turns and goes the opposite against the masses. And that's what we saw yesterday. So we had a spike to the downside, which was also going to be a gap fill. And then we saw the market kind of blow off with a big squeeze here, everybody getting long stocks for the day. And that's right where I ended up taking a short play and caught the first wave down. Went against me for a couple minutes, but overall rolled over. This is a 3-minute chart, keep in mind. I rolled over and then came down, took some money off the table, and we got a bounce, and then we got that final breakdown in the market going into the close over here, where price just continued to break down and sold off. And that was a lot of this was the fact that we had all this panic buying, everybody being greed buyers, all just chasing price higher, and we had our momentum cycle topping out. Uh, and of course, we had the spike low. Everything was saying, okay, we should see the market pull back, which we initially did. And then things started to look a little more bearish throughout the day for the second half of the move. And again, that video I talk about how to, when you're day trading, you usually get an initial move in the morning and then a consolidation through the afternoon, counter trend, and then you get a continuation into the close. If you haven't seen that video, it's in the members area under trading education tab. It's a drop down. It's something to do like intraday trading hours or something. But these are all things that come together and can paint you a pretty clear picture of how to day trade, when your ultimate time to swing trade positions. If you understand day trading, you can get in at the best possible times before the market turns. And all these things come together to paint a perfect picture as a well-balanced trader. All right, let's go back to energies real quick here. All right, here's a chart of crude oil. We've been talking about this for a while, that we're probably going to see it continue to chop around and eventually post some gains here and test these recent highs. We're seeing crude oil has been doing that. Yesterday traded higher. Today it's trading up again another percent, working its way back up to this 42 level. From there, I think we're going to see it kind of chop around, trade in this range, and it could very easily do what we've seen in the past, where it gets up to a resistance level, fades all the way back down, bounces up, trades a double top, kind of consolidates for a while, and then fades back down to new lows. There's no reason why that can't happen again. It chops around, eventually fades back down to test these lows, most likely pushed into a nominal new low, which will catch the media attention, get everyone bearish, and then of course it'll bounce again. But that's where I see things unfolding. And if we take a look at the charts or the cycle analysis for crude oil, this is the USO ETF, the daily chart. And what we're looking at here is simply cycle analysis is showing that we're going to probably see it top out the next a week or so, 4 or 5 trading sessions. Of course, we've got this high right across here. Price came down, we're coming back up, likely going to hit that. We could see it flounder somewhere up here for a while and then eventually start to fade and lose some ground. And cycle analysis shows it eventually coming back down to test potentially these recent lows again. So that's kind of where we are for crude oil. I talked about this in an energy oil I posted yesterday, where crude oil is likely going to continue to go up, test these highs. It's going to pull the energy sector up. It's going to pull the stock market in general up, push to these new highs, and then we're going to start to see everything top out, and we'll see stocks and oil and energy stocks go back into a decline and sell off. Anyways, that's it for today. Take care. Bye-bye.